We are covering the 7 top actively traded stocks that are bullish today. While watching price actions, let us inform you our review on PFE. Pfizer Inc., one of the biggest names in global biopharma, just scored another regulatory win, this time in Japan. The Japanese Ministry of Health, Labor and Welfare approved Tivdak, a cancer drug co-developed with Genmab for advanced cervical cancer that has progressed after chemotherapy. This is a significant step forward, not just for patients in Japan, but for Pfizer's oncology pipeline as it continues expanding into new markets. The approval is backed by strong Phase 3 clinical trial data, showing Tivdak reduced the risk of death by 30% compared to chemotherapy. That's a meaningful improvement in survival, and it positions the drug as a key treatment option for patients who previously had limited alternatives. With this green light, Pfizer and Genmab now have another revenue stream in Japan, a major pharmaceutical market. While Genmab is leading commercialization efforts there, Pfizer still benefits from its global co-commercialization agreement. Despite this solid news, Pfizer stock only ticked up 0.8% today. But the bigger story might be what's happening behind the scenes. Institutions appear to be quietly loading up on shares as they hover around $25. Pfizer has struggled post-COVID with declining revenue from its pandemic-era blockbusters. But approvals like this one show it's still pushing forward in high-value areas like oncology. The stock may not be rallying just yet, but with institutions showing renewed interest and a strong pipeline in place, it could be setting up for a longer-term recovery. Our review on RKLB. Rocket Lab USA Incorporated is having a moment, and investors are taking notice. The stock is up today, and for good reason. The company has been selected to compete for U.S. Space Force launches. That's not just another contract opportunity. It's a huge validation of Rocket Lab's growing reputation in the space industry. The company has long been known for its small satellite launches with the Electron rocket, but now its next-generation Neutron rocket is stepping up for bigger missions. If Rocket Lab secures a piece of these lucrative military contracts, it could mean long-term revenue stability and a major boost in credibility as a serious player in both commercial and defense space launches. Wall Street analysts are liking what they see. Roth MKM reaffirmed their buy rating and stuck with a $25 price target, while Bank of America is even more bullish, setting theirs at $30. That's a solid upside from current levels, and the broader sentiment on the stock is leaning positive, with an overall moderate buy rating. Investors seem to be slowly warming up to the idea that Rocket Lab isn't just a niche space startup anymore. It's evolving into a full-scale aerospace and defense company. That said, there's a bit of a red flag with insider selling. Over the past quarter, multiple executives have offloaded shares, including COO Frank Klein, who sold nearly $810,000 worth of stock. Insider selling doesn't always mean trouble. Sometimes it's just execs cashing in. But when it happens around a stock that's gaining momentum, it's something to keep an eye on. Still, Rocket Lab has been on an impressive trajectory. It's not just about launches anymore. Their space systems division is growing, providing satellite components, mission management, and space-based services. This diversification makes the company more than just a rocket provider. It's becoming a critical player in the broader space economy. The stock is only up about 1% today, but the bigger picture is what really matters. If Rocket Lab starts locking in these government contracts, the stock could see some serious movement in the months ahead. This could be just the beginning of a much bigger story. Our review on NOK. Nokia Oyj is making moves again, securing a deal with Germany's National Research and Education Network, DFN, to upgrade its IP core network. This is a big win. DFN connects 850 research institutions across Germany, handling massive data transfers. With Nokia's advanced 7750 service routers, DFN is jumping from 100G to 400G speeds, with room to scale up to 800G. Even better, Nokia's tech cuts power consumption by up to 75%, making it both faster and greener. This aligns with Nokia's broader strategy, expanding beyond telecom into enterprise networking, data centers, and software. They've already landed Apple as a customer for their IP routing tech, and now they're making a strong push into Industry 4.0. Their latest move? Launching 6 new industrial applications for their MX Industrial Edge platform, bringing AI, automation, and real-time analytics to factories. The goal is to help industries streamline operations and improve efficiency, and they've partnered with big names like Bosch Rexroth and Nozomi Networks to make it happen. The stock hasn't made a big move on this news yet, but Nokia is clearly laying the groundwork for long-term growth. Whether it's high-speed networking, enterprise solutions, or industrial digitalization, they're proving they're more than just a telecom company. If they keep landing deals like this, it's only a matter of time before the market catches on. Our review on QUBT. Quantum Computing Incorporated (QCI) is making moves in the quantum optics and nanophotonic space, bringing real-world applications to quantum tech without the steep learning curve. Their solutions operate at room temperature, require minimal power, and are designed for industries like AI, cybersecurity, and sensing. Instead of just theory, QCI is focused on practical, scalable quantum solutions that businesses can actually use. The broader quantum industry is heating up. Quantinuum is set to launch its Helios device this year, a system boasting at least 50 high-fidelity logical qubits, essentially unlocking problems that are trillions of times more complex than before. That's a big deal, and with Honeywell backing Quantinuum, the competition is getting fierce. At the same time, Nokia and Honeywell Aerospace are working on quantum-safe networks to future-proof cybersecurity, and D-Wave is rolling out blockchain innovations powered by quantum computation. It's clear the race for quantum supremacy isn't slowing down. For QCI, the focus is on positioning itself in this evolving landscape. Their quantum photonic chip foundry, launching in early 2025, could be a game changer, especially with purchase orders already in hand. They've also secured collaborations with NASA, validating their Dirac 3 quantum optimization machine as a viable tool for real-world applications. However, not everything has been smooth sailing. Last quarter's earnings disappointed investors, leading to an 11% stock drop. Still, the company's long-term vision remains strong. A key development? The appointment of Eric Schwartz to the board. With a background in corporate finance, mergers, and scaling businesses, Schwartz's expertise could be exactly what QCI needs to refine its commercialization strategy and accelerate adoption. Investors seem to like the news. The stock popped 6.42% on the announcement. While the quantum sector is still in its early days, Kai's focus on photonics and entropy computing sets it apart. If they can execute on their roadmap, they could carve out a unique niche in this rapidly evolving space. Our review on ONDS. Ondas Holdings Inc. is making waves in private wireless and autonomous drone tech, and investors are taking notice. The company operates through 2 key segments: Ondas Networks, which provides secure wireless connectivity for mission-critical applications, and Ondas Autonomous Systems, which focuses on high-performance drone solutions for government and enterprise clients. Their patented FullMax platform powers private broadband networks, while their autonomous drone platforms, including the Optimus system and Iron Drone Raider, are designed for real-world, high-stakes operations. Today, the stock is soaring, up 12.02%, and it's not hard to see why. The market is paying attention to the growing demand for automation, especially in defense, infrastructure monitoring, and industrial applications. Companies like Ondas, which are bridging the gap between connectivity and autonomy, are positioned right in the middle of that shift. Their drones aren't just flying cameras. They're full-fledged automated systems designed for persistent surveillance, security, and operational efficiency. The big question for investors: is this just a short-term pop or the start of a bigger run? The momentum suggests confidence in Ondas strategy, whether it's new contracts, expanding adoption of their drone solutions, or broader industry tailwinds. If they can keep executing, securing deals, scaling deployments, and proving their tech's value, this kind of market enthusiasm could turn into sustained growth. Our review on AppLovin Corporation, the AI-powered mobile advertising leader, has been making waves lately, and not all of it good. The company, which connects app developers with ad space through its cloud-based platform, has been in the hot seat after some scathing short seller reports. These reports, most notably from Muddy Waters, accuse AppLovin of inflating its ad performance numbers and engaging in tactics like attribution fraud, basically taking credit for installs or purchases that came from competitors' ads. As you might expect, this caused quite a stir, and the stock took a big hit, dropping 20% when the allegations first came out. But here's the twist: AppLovin isn't backing down. The company has brought in a big-name law firm, Quinn Emanuel, to investigate the claims. CEO Adam Faroohi has come out swinging, calling the short seller reports misleading and designed to scare people. He's promised to uncover the truth and protect the company's reputation, employees, and investors. And just like that, AppLovin stock is making a comeback, bouncing up 4.08% after the announcement of the investigation. This shows that, at least in the short term, investors are buying into the company's defense and seeing this as a temporary setback. Now, let's step back and look at the bigger picture. AppLovin's not just any underdog tech company trying to make it in a competitive space. It's actually been one of the big success stories in mobile advertising. In fact, in 2024, the company's market share jumped a staggering 75%, from $1.8 billion to $3.2 billion, while its rival Unity saw its market share decline. This is happening even though Unity has its own strengths, like being deeply embedded in the game development process. AppLovin, on the other hand, is crushing it in a different way. Their ad platform, powered by their AI engine Axon, is more than just another ad network. It's revolutionizing the way developers monetize their apps. And let's not forget, AppLovin is going up against some of the biggest names in the industry, like Google and Meta. While these giants still dominate the digital advertising space, AppLovin is steadily stealing market share. The company's expansion into new verticals, including connected TV, CTV, shows that they're not just staying in their lane, they're pushing forward, trying to disrupt bigger, more established players. But with growth comes risk. The short seller reports, no matter how flawed they may be, have definitely caused some volatility. AppLovin's investors are watching closely to see how this plays out. If the company can successfully defend itself against these allegations and continue growing at its current pace, we could be looking at a serious winner in the space. But if any of these accusations hold water, it could derail the growth story and hurt the stock in the long term. At the moment, AppLovin's fundamentals are solid, with revenue growth expected to come in at 21% and earnings expected to grow even faster. The current dip in stock price might actually present a solid entry point for long-term investors who believe in the company's future. However, volatility is expected, and this stock may not be for the faint of heart. Still, if you're willing to ride out the bumps, AppLovin seems well-positioned for continued growth in a trillion-dollar industry. But, as always, it's a bit of a waiting game to see how the legal battle shakes out. Our review on XP. XP Incorporated is a big player in Brazil's financial services sector, offering investment and wealth management solutions. Recently, analysts have pointed to a potential 37.2% upside for its stock, which closed at $14.67. While the price target range is wide, anywhere from $13 to $30, the consensus target of $20.13 suggests significant growth potential. But here's where it gets interesting. XP's earnings estimates have been revised upward by 7.4% in the last month, with no negative revisions. This signals growing confidence in XP's future performance. Additionally, XP holds a Zacks rank of number 1, strong buy, meaning it's in the top 5% of over 4,000 stocks based on earnings estimates, which adds to the optimism. While analysts' price targets aren't always spot on, the earnings revisions and strong Zacks rank indicate that XP could see a solid upside in the near term. And today, we saw a nice 5% pop during Power Hour, showing that investors are already reacting to these positive updates. For those considering XP, there's a lot to like here. But as always, do your research before diving in. Please subscribe, give the video a like, and watch more from our playlist. Thanks.